my screen, and you guys should all be seeing a Harmonic scanner up there. But yeah, just to get started, I just want to let everybody know that I am going to give some disclaimers. I am not a Series 6, 7 license holder, trader type person. I'm not a financial advisor. I'm not here to tell you what to do with your money. I am a happy IML subscriber, just like the rest of you guys. I use the university for the education that it provides in trading. I concentrate on fiat currencies. So there's indices and crypto. I don't do any of that stuff. And I'm just going to share some of the things that I've learned over time to hopefully make your entry into this experience a little less painful. And if you guys can learn from my mistakes and benefit from those things that I've learned over time, that's just a happy world, right? So one of the things that I do before I start is just want to say that past performance does not guarantee future success, and any trading platform, any system, any thing that has to do with trading has some inherent risks. We never ever trade with money that we cannot afford to lose. So I drive a convertible. I like putting the top down, driving down I-95, and I just want you to picture this for a moment. When you go to put real money in your trading account, just picture like you're driving down I-95 and take those $100 bills and throw them out the window. They are gone. And when you start trading, when you can release your attachment to money and only concentrate on the charts, the money comes. But when you start looking at these charts and all you see is $100 bills and you're freaking out about the money, you never understand the chart. So, you know, but Tommy, I'm not studying with the IML to learn how to lose money. Oh, yes, you are. Because the best traders can trade 7, 8 out of 10. That means you still have to lose 2 or 3 out of 10, right? You cannot earn unless you learn how to lose. So, and this is a concept that's really true no matter where you go, especially in sports. I like to use the analogy like Babe Ruth is one of the all-time home run hitters, since baseball started. He's also holds the record for the most strikeouts. So when you're learning this process and you're losing and you're striking out, understand that that is part of the process and learn to lose because you're going to, right? It's just a happy thing. Love the loss, learn from the loss, and move on. Because sometimes you didn't do a darn thing wrong. You followed your trading plan, you followed all your indicators, and it just didn't work. That happens. You're in the foreign exchange. That's just part of the deal. So let me just come over here. Meeting controls. Good. So you guys should see the Harmonic scanner. Yes? Okay, perfect. Good. So we all know how to go into our office and you sign in, and then there's a left-hand column with all your choices. You look down, you see a Harmonic scanner, you click on it, and then you come in and you sign into the Harmonic scanner with the very same credentials that you use to get into your university to study. And this is what a scan looks like. So we're going to start from the very beginning, and we're going to go over what in the world is going on here. So if you come over here to the upper left, you'll see 15 minutes. That means this chart is on the 15-minute time frame, and each one of these candles is worth 15 minutes. So time is measured left and right, and quantity or price value is measured up and down. So we're also using candlesticks. There are multiple different options. There's hollow candles, hakinashis, lines, area, fine, that's cool. I prefer candles. These are chart properties. You could change the background and so on, and I'm going to try to do that in a little bit. And this is built on a TradingView platform. So we could put different indicators in there, and we're going to do that. And right over here, this shows us the pair that we're looking at. This is Audi, JPY, AJ. So those are currencies over in the Asia, Asian market, and the pattern is a butterfly. I don't really spend a whole lot of time figuring out butterflies, pelicans, ostriches. I don't care, sharks. I don't care what it is, because the harmonic scanner is doing all the math in the background, and it just identifies that there is a trade opportunity happening. So the very, very first column are all different brokers. And the differences between these brokers is actually going to be some of the pricing and some of the spreads. So what's a spread? The spread is the amount that you pay your broker just to participate, and is measured in pips. So the brokers and the market makers, you'll hear these terms. I don't know if you've all been through the academy 100% of the way, and if not, I highly advise you to develop a very healthy working relationship with a Daisy Duncan and get through your academy. If there's a term that you don't understand, throw it in the chat. Debbie can help you with that, or you sound it out and we'll go through that. But there are market makers and there are brokers. And both of these people or groups of people are not on your side. They really just want to take your money. Well, Tommy, now you're making me nervous. Well, you should be nervous because you're learning something new. You were nervous on your first day of work. You were nervous on your first day of school. You were nervous on your first blind date or your first date. So why shouldn't you be nervous now? But we're going to teach you how to handle the nerves, okay? So we have market makers. Those are people who have vast sums of money at their disposal. They're with central banks, and they're controlling the flow of money throughout our planet. So brokers are the people that we actually engage with, and they set the prices. They are like, if we were in an auction, they are actually the auctioneers, right? So when I come here, I always click on Trader's Way, and I click on the long scans. This is the 1 hour, the 4 hour, and the day. And let's just grab the first one. The first one is the newest of the time frames. Now, this is what the scanner looks like when you don't have any preferences set. If you come way up on the top and go way to the right, there's a little cloud with a pull down. It says load chart layout where you cover it. I have my chart already set up. I have it saved. I have it Tommy Harmonic. I click on that. And now my preferences come up. I like to trade on a darker chart. So in order to get your preferences set this way, you right click out in space, you hit properties, and now background, and then you can change your background, hit OK, and like that, right? So let me just take off some of these additional indicators real quick, and we'll have a conversation. So this is what the scan looks like. Sorry, this is what the scan looks like out of the box with no additional indicators. This is a sharp pattern. This is Audi CAD. This is the broker. So the very first thing I do is when a call comes up is I look over to my right. I scrunch the screen. If you click and pull the screen higher and lower, you can move it to your liking. And if you roll your mouse, you can change the time. So you can come over here and change your time. Now, what I'm doing here, you will see there's multiple scans that this was called on, okay? And we're looking back in time to see what the trend is on this pair. So this pair is trending downwardly. And this particular call, the latest call, which is here, is calling out a sell. And how do I know that? Well, I know that because my entry price is here and my stop loss was above my entry. And what might be confusing people is this multiple call. So let me just get out of this one and do one that's a little easier. Hold on, because that just might be a little confusing. Okay, this is US JPY, so UJ, and I'm going to come over here and I'm just going to look at what's going on. So this was trending upwardly. There's an upward trend. So if I'm getting into a sell, that's a counter trend trade. And what it's asking for, this is calling out a buy. How do I know that? Here are my entry prices. Over to the right, they're listed in green, and I have 2 entries. And we also have a stop loss. It's calling out a buy. So this, if you entered this trade right from the jump, this trade failed. This was a loss. So the scanner is really good. It's good out of 7, 8, 9 out of 10 on some months. The other thing we have to realize is we are now in the summertime. We're in July and August. Anyone familiar with Europe? The companies in Europe in July and August give people like a month off, 6 weeks off. So that kind of slows down the market and it kind of screws up some of our methods and our madness, and we just have to deal with it. So that being said, right now my harmonic scanner is calling out a buy, and I like to bring in other indicators. Okay, so in order to do that, we click on indicators, you type in BOL for Bollinger Band, and that's what comes up. This is a Bollinger Band. So now I have a secondary voice. I have another voice telling me another indicator. So if you look at the way the Bollinger Band works, the top blue line is the average highs. The bottom blue line is the average low price. And the red is the median. And if we scroll back over time, just scrunch it a little bit, we can see how this Bollinger works. By definition, the price is going to bounce from average high to average low. Average high to average low. That's just what it does. But also, if you look at this closely, you can see that when the prices close outside of the average, outside of the edge of the market, outside of the high, or over here, outside of the low, it wants to fight to get back into normal. So my Bollinger Band is also telling me that this should be a buy because my price is closing outside of the low edge and it should come back. And look, it did come back. It came back into the Bollinger Band, but it's still a very unhappy call because it's continuing to drop. So if I would have just typed in this call, I hit my entry, I put in my stop loss, I'm going to scrunch this way out and make it big so we can all see. Right here, it hit my stop loss, and this is a loss. Except, I use 2 other tools. I use SARS, and the SARS saved me 9 times out of 10. So if you click over here and type in SAR, I use 2 of them. So click them in twice, and when they come in, you're going to go to Format, and you're going to change this to 03 and 03. And on Style, you're going to make it yellow, and you're going to punch it way up, and you're going to make it like this size. and you're going to say, okay. And then you're going to do it again, and you're going to make the second one red, and these inputs are 0606, and you want them the biggest one, because sometimes the yellow and the red lay over one another, and when they lay over one another, you want to be able to see that they're there. So if they're different sizes, they're easier to see when they're laying over one another, and I'll point that out. Okay, so if you look right here, you see where it flipped, and the yellow and the red are one on top of the other, but you can still see them. So now that you have these indicators on your chart, you save them as default. Let me just make sure I show you that. Over here, save as default. Say okay. Then you come over here and you click Save Chart Layout, and it asks you to do a name. Now, I already saved this chart layout, so now I call it Tommy Harmonic. So next time you sign onto the Harmonic scanner, you have all this stuff saved. You don't have to rebuild it all the time. So why didn't Tommy get into this trade? Well, first, I don't ever enter on the D extension. This is a math algorithm that Stephen Hooley wrote on a TradingView platform. Makes this pretty pattern. This one's a shark. And when this math happens, when X, A, B, C, and D happen in the background, it calls the trade. So I use all four of these indicators: the harmonic scanner, the Bollinger Band, and my SARs. The red SAR is my early warning system, and my yellow SAR is my confirmation. And what does it mean? It means when the SARs are on the top of the price, it's calling out a sell. When the SARs, if you look back in time over here, when the SAR is at the bottom of the price, it's calling out a buy. The SARs are very clever, okay? My harmonic scanner is saying it's going to be a buy. Johnny Bollinger is positioning me for a buy. But look at what's going on with my SARs. Both my SARs are still saying it's a sell. Tommy, it's a sell. I have two people telling me it's a buy. I have two people telling me it's a sell. What do? I wait. Patience. In this game, patience pays. Rookie mistake number one. I got to get in before I miss the move. I got to get in before I miss the move. Say that in your own head. I got to get in before I miss the move. And cut it short right there. If you feel compelled to get in because you're going to miss the move, don't get in because you don't understand the move.
That's right.
If you are saying, I got to get in because I'm going to miss it, the market makers and the brokers are showing you just enough to play on your emotion to make you click the button before you fall for the fake out. There's always a fake out before the breakout. There's a fake out before the breakout. Tommy's being patient. Why? Because I've seen them fake me out so many times, I know what they're about to do. That's why we have this Zoom. That's why I'm telling you this. Don't take the fake out. I'm waiting for my what? I'm waiting for both my SARs to flip before I get in. Every Tom, Dick, and Harry, every novice, every beginner went and gave the brokers their money right here because they hit their stop loss. They collected their stop losses. Where's Tommy's money? Still in Tommy's account because I ain't falling for that nonsense. Okay? And this is why we're having this discussion, because I've done this trade on this platform so many times. I see what they do, and that's why I added SARs in. That's why I look at Johnny Bollinger, right? So What I'm going to do is I'm going to leave this trade, and I'm going to go back into the brokers, and I'm going to go back into my long charts, my hour, 4 hour, and my day. And the newest ones are on top. And the legacy ones, the older ones, are down here on the bottom. So I'm going to call out GBP, JPY on the 1 hour. It's a Gartley pattern, but it's something that's already happened. And I want to bring it to a point in time over here to my D extension. And we're going to have a conversation. So I picked this at random. I haven't looked at this before. I don't know what the story is, but I'm just giving you a demonstration on how these 4 indicators work hand in hand to help you protect your account. What is the first responsibility of an accomplished or even a trader? Most people say make money. That's a novice. Your primary responsibility is to protect your account. You want to protect that account. I got X amount of dollars in there. Every time I enter a trade with the mindset that this is the trade that's going to wipe my account out.
Mm-hmm.
Why do I do that? That forces me to be cautious. It forces me to play by my rules. You don't trade with real money unless you have a written trading plan. Tell me, what's a trading plan? Well, we have those discussions on other nights. But right now, I'm showing you 4 indicators. So when I'm on my harmonic scanner, my written trading plan says I use the harmonic scanner, the Bollinger Bands, and the SARs. And it also says to me, I do not enter a trade until all 4 of these indicators agree. Not 3 out of 4, not 2 out of 4. All 4 must be present before I push the button. And that saves my butt more often than not. Sometimes it holds me out of a winning trade, but that's okay. Because I'd much rather be out of a trade wishing I was in than in a trade wishing I was out. Because the market is always moving. You're not going to miss the move. You're just lining yourself up for a move that you understand. You want to take the move that you understand and you can see. Okay, that's what makes a trader. Okay, so here's the D extension. What do we have? Here's my entry price. My stop loss is above my entry. My stop loss is on the buy side. So if I hit my stop on the buy, that means they must be wanting me to take a sell. And my take profits are in the sell side. So this is telling me I should go in for a sell. But now look at my SARs. I got my yellow SAR and my red SAR on the buy side. And I've got Johnny Bollinger and the harmonic scanner telling me, it's going to drop into a sell. So what does Tommy do? Tommy waits. Tommy is patient. So now let's click off another candle. We're on the 1 hour chart. An hour time goes by. And look. I get a red candle. Candle's red. I better get in before I miss it. I better get in right now. If you say that to yourself, do this. Look, watch. Can you see me? You might not be able to see me, but I'm taking my hand and I'm smacking myself in the forehead. Don't get in yet. Why? Because you still got 2 SARs on the buy side. Look, I'm waiting. I ain't in yet. I'm still not in yet. My red SAR flips first. Red SAR, early warning system. My yellow star still in the buy. I see got a split decision. Boom. Now, this is 1, 2, 3, 4, 5, 6, 7, 8, 9 hours have gone by after the call. 9 freaking hours went by. Now I have all my indicators. Now I get in. Tommy, how many pips you take? Tommy takes 5 measly pips. 5. 1, 2, 3, 4, 5. Here's the dynamic. Every time the market makers or the brokers go to make a move on the market, they raise the spread. Sometimes you see a spread of 3, 3.5, 4 pips. You got to pay them 4 pips just to get in the game. 9 hours after they move the market, what do you think my spread's going to be when I get in? It's going to be half a pip. It's going to be 0.5, 0.3. I don't want to pay them that much, right? So now if you come over here on your little ruler, your measuring thing over on the left, you measure, you come in. I got in on this candle. Hypothetically speaking, I actually didn't take this trade, but my system says get in. And now, this is 2 pips. This is 5. That's 5 pips right there. So let me see. Let me come over. Boom. So on this move, let me measure. I get in here, it retraces a little bit. There's my 5 pips. I got my 5 pips on my next candle. And I got out. If it's really hard to see, you can actually sign into your own harmonic scanner and follow me on your own computer and light up your own harmonic scanner and make it bigger. Okay? So the moral of my story is, with my rules, I waited 9 freaking hours. But I made my pips in like, I don't know, this is an hour chart. In less than 2 hours, I'm out.
Hey, Tommy.
Yes, sir, Fred.
If people can't see, have them go up to the view options, up at the very top of the screen where it says you're viewing Tommy Raviole's screen. And right there is view options. Have them go to 100% original size, and then they can move the screen with their mouse, and then they'll be able to see it clearly.
Fred, you're a champ, man. I got to shout it out to you, Fred, because let me tell you something. Fred's been nothing but a blessing on these forums. He's doing all kinds of stuff. He's got recordings going. He's always got great input. We appreciate that. So I had no idea. I have no clue. I'm just like, I'm like the rest of you guys. So, Fred, thank you for that. Would you repeat that for everybody so maybe they can write that down?
Sure. At the very top of the view screen of your window, you'll see a green bar that says you're viewing Tommy's screen. To the right of that is a little text that says view options with a little caret, down caret. Click on that. It says fit to window, 50%, 100%, 150%. I put it at 100%, and then I move the screen around with my mouse to where your cursor.
Awesome, Fred. Thanks again. I really appreciate you. Okay. So the moral of my story. The moral of my story is I was very patient. I got all my indicators. I took my 5 pips and I ran like I stole them. Tommy, I did not join IML to learn how to earn 5 pips. Oh, yes, you did. You might not think so because when you got started, you traded in micro lots, 0.01. And you turn 0.01 into 5 whole cents, and you got to keep 4 cents of it. And you're not running around doing a victory dance over earning a nickel or earning a quarter or earning 11 cents. But what you're learning is you're learning how to take 5 pips out of this market just by looking at a screen. Why is that important? Well, it's important because a pip is actually an acronym. It's percentage in profit. Percentage in profit, PIP. That means you and I can take the very same trade on the very same broker. Everything's the same. I'm trading lot sizes of 25. What's my PIP worth? Who knows? What's a PIP worth when you're trading in lot sizes of 25? It is $250 per PIP. Who wants to learn how to grab 5 pips now? So when you grab 5 pips at $250 a pip, that's what? How much money is that?
$1,250.
Are you okay with that?
Absolutely.
Now, realize there's times, I'm on the 1 hour chart. This time, I was in a trade before we signed on here. Let me see. Let me go into my account real quick. I was in, let me get my history up. Trading history. I was in USD JPY for approximately 9 minutes. And I grabbed 5 pips while I was waiting for you guys. Now, I'm not saying that to brag. I'm saying that when you get a system and you learn how to actually make a trade and use your indicators, you can go on the market pretty much any hour, any day, any session, and learn how to grab 5 little. Now, I'm not going to tell you what my lot size is, but on a lot size of 1, that's $50. Well, I was waiting for you guys to come on over here. Okay? So that's my point. My point is learn how to make 5 pips, percentage of profit, and let's go from there. Because you're going to build up your account to where you're trading in standard lots. So, does anyone have any kind of questions as what we already covered? If you guys have been taking trades and something went south, questions, whatever, shoot them out. We all good? Because if we're good, we'll go and do another back test, and I'll show you. This is called back testing, when you just go in something that's already happened, and you look at what would have happened if you actually followed your freaking rules. I think this is silver. Okay, let's come back. It's either silver or gold. I don't trade. I get confused with the X.
That's gold.
Oh, that's gold?
Yep.
Thank you.
Silver is XAG.
Yeah, thanks. Cool beans. All right, so here's the call, right? It's calling, here's the entry. Now this is a very interesting dynamic. This is a call where the entry price was not made. Here's my entry. It's called not a buy, and it just didn't make it. So if you're just plugging in numbers and you don't know what's going on, you miss this. Is that Aria? Hey, girl. It's early in the morning for you. We love you.
It's me, Tommy.
Oh, it's you.
Sorry.
That's okay. I thought Ari's on from Israel. You know, you can change it. All right, no worries. Back to the story. Okay, so let's go look at what the story is. Let's look at the D extension. Here was the call, and let's follow the rules. So this call is calling out a buy. My entry is here. If I scroll down, I'll hit my stop loss. Here's the stop loss on the bottom. This was never made. The entry price was never made. So we're obviously not getting in. But my Bollinger Band is saying, dude, I'm at the low edge of the market. It's going to come back. And I've got my SARs saying it's a sell. Well, the Harmonic scan is calling a buy, and Johnny Bollinger is saying it should go towards a buy. So what happens when I wait for my 2 stars to flip? That's way over here. Now, my rules, I'm going to get in, and I'm going to go and draw down. I'm going to go poof, right into the toilet. But when I do this, I'm still using the stop loss that the scanner told me. So my stop loss is over here. I'm still covered. So I got in here. And now silver and gold, has different way of calculating pips, but my take profit is like somewhere right over here. So I'm in and out, take my shot, gone. So the moral of the story is when these SARs flip, 1, 2, I got in here, I went into drawdown, I'm in profit over here. Let's do another one. Let's do one on the 15-minute chart for those people who might not have a whole lot of patience. Here's a 15-minute chart. I don't use the 15-minute chart. Just want to let you know. I don't use that. I'm just going to show it to you. I use the long charts. So,
Why don't you use the 15?
because I like the calculations on a longer view of the market. Realize these calls are being made by an algorithm that was written. It's just math. I want the math from a longer time period, from a higher view of the market, right? If I'm looking on the 1 minute, the 3 minute, the 5 minute, the 15, that's a very flighty time frame. It's very erratic. It can be very spiky. If I'm looking at the 4 hour, the 1 hour, the day, there's a whole lot more momentum in those moves. You follow what I'm saying?
Yeah. But couldn't you take the 15-minute as a start and then go to the 1 hour, the 4 hour, and then the day?
You could. I don't do it that way.
Okay.
I go the other way around. I look at the day for my trend. The trend is my friend.
Okay.
All right. I want to know if I'm in a uptrend, a downtrend. Then I bleed down into the shorter time frames because I want to know if the call is with the trend or a pullback. Make sense?
Yes.
Cool. So here, following my rules, right? This is calling out a sell because here's the entry price and the stop loss is above and the D extension does not make my entry. My entry happens way over here from the numbers. I'm still not getting in because I have two SARs that are calling out a buy when the SARs on the bottom of the price is calling out a buy. So remember I said sometimes the SARs will flip at the same time? Here's a perfect example. I got the yellow and the red flipped at the same time and it made a flat top. I'm getting in. And where's my little rulery thing? And let's start measuring some pips. There's my 5 pips. Right here. I'm done. Where's the 5 pips? You know where the 5 pips are? They're in my account. But Tommy, you're missing the rest of the move. No, I'm not. With my strategy, that's not mine to take. I'm taking 5. And I'm winning on 5. Because I'd much rather have a win rate of 70, 80, 90 in a row at 5 pips than winning, I don't know, 9 out of 10. You follow what I'm saying? Let's just do the math in your head. If you're winning 75 in a row and you're taking 5 pips and you're trading in standard lots, how many pips is that? 75, 750, well, 75, 300, what, 350 pips, something like that? So 350 pips at $10 a pip. That's still $3,500. But you're constantly winning. Does that make any sense to anybody? Am I losing you?
No, you're fine. Nope, you're clear.
Okay, so this is why I do what I do. I wait. In this scenario, this is 15, 1, 2, 3, 4. I waited for a freaking hour on the 15-minute chart. I got in, took all my money. I want you to realize something. There's going to come a day when you guys are trading in lot sizes of 25 to 50. a retail account, a broker will allow you to trade in lots of 25 with no sweat. Do you want to sit in front of charts for 80 hours a week? Or you want to come in for an hour a day, 3 or 4 days a week, and cash out $5,000 a week? I'm just saying, right? So you can back test this. This is the way you back test something. You go in, you pick a chart, any old chart, boom, random, and you come back and you do this and you look at the strategy to see if the strategy won or not. Here, where are we? This is check stop loss. This thing still, I would not be in this trade because I never got to the point where I had both all my indicators on the same side. I'm just not getting in. Why? It doesn't follow my rules. So if you're trading in a trade that doesn't follow your rules, you're not trading. You're gambling. I can go to the Indians. I can go to I live like 3 miles away from the freaking Hard Rock. I can go there to gamble whenever I want. I don't go into the foreign exchange to gamble. When you're in a gambling mood, go play blackjack. Right? Don't trade and gamble. Okay? So we have questions, we have comments. I know some of you guys have been using this system. It might be confusing, it might be working. Anyone's got feedback? Someone want to talk to me. This is a conversation.
Yeah, Tommy.
Yeah, Robert.
You have a question, right? So when from what I'm seeing, when the scanner's calling a sale, right? The scanner was calling a sale.
Yes, sir.
Like you say, I mean, you were following what you're supposed to be doing, but you actually wait until the SARS tell you that it's a sale.
Exactly.
Okay.
Exactly. See, the scan is a really, really good tool. It'll do, let's just say 7 out of 10. You're going to win 7 out of 10. I don't want to lose the 3.
Right.
Right? So
right.
I take less pips on a more regular basis. I just don't like to lose. I just don't like it, right? Now, are you going to lose? Yes. But I'd rather lose once or twice every 50 or 60 trades than once or twice every 10 trades. So I found that if you bring in these other indicators, my win rate went way up. But in order for your win rate to be high, you have to follow these rules religiously. Now, here's something else that I do. When I win 3 in a row, if I'm scalping and I win like 3 trades in a row on one session, I get up and I walk away. Tommy, how can you get up and walk away when you're winning? Because I get cocky. I just won 3 in a row. Oh, this one's my SAR is gonna flip. I walk away to check myself, to bring myself back to reality. Like, dude, you're just a freaking trader. Follow your freaking rules. Don't get fooled of yourself. 3 wins in a row, I get up and walk away. If I have 3 losses in any session, I turn the computer off. Someone's asking about Euro USD. Yeah, Euro USD. A buy? Well, okay, let's talk about it. This is the Euro USD call, and we're on the 1-hour chart. And the first thing I do when I pull up the scanner is I come and I look at my entry price, and I look at where my stop loss is. So my entry is here at 1.0 1, 2, 3, 4, blah, blah, blah. And my stop loss is above it. My stop loss is on the buy side of my entry. So if I actually went into this and entered as a buy, I would hit my stop loss and I would lose money. Therefore, when I enter, my take profits are below. I have to go into a sell to take profit. Is that Nellis? Unmute yourself. Talk to me. No one's going to bite you. Do you understand?
Yeah. No, I'm just new to trading and new to the Harmonic scanner, so I was just learning how to read it.
Okay, rule number 1. We never apologize for a question. Welcome to the wonderful world of trading. I'm very happy that you're here, and we're here to make you feel comfortable in our family and our community. So the only question that's a stupid question is the one that you keep in your head. Because if you leave here and don't have your questions answered, when are they going to get answered? So now let's welcome. So do you understand my explanation?
Yes.
Perfect. And if you have any other questions, man, just shout them right out. You're with family here, okay?
All right. Thank you.
You're very welcome. Anybody else?
Tommy, how do you determine which trades you're taking first thing in the morning?
That's a really good question. The very first thing I do when I go to trade is I get onto the Forex factory. I lost my little controlling things, my share thing. I don't know where that's at. I don't know where my share thing went. Hold on. Yeah, it's not there.
It's on the bottom.
Yeah, that's easy for you to say. I don't
What do you
see-
want to share out? Forex Factory?
Yeah, but I lost my little. I have multiple screens here, and every time I come in here, it pops off to one screen or the other, and I lose the controls. So if you guys type in forexfactory.com, that's where I go to see the news announcements. I'm looking here to get back. Let me see if this, hold on. Yeah, see the little banner that says, hold on, new share.
On there?
Hold on, I found it. It popped up. Okay, you guys should be seeing the Forex Factory now. You see that?
Yes.
Okay, cool. So this is it's a public forum. It's free. They don't charge you anything to come here. And this page shows today's date, July 10. You're going to come over here. If I was getting on to trade right now and put in some trades, what I'm going to see is I'm going to see that this is the time of day. The last news announcement is at 9:30 p.m. And of course, it's almost 10:30, so that won't affect any of the trades I might enter. So I'm going to click over here to Thursday, right? Thursday, 12:30 a.m., that's going to happen in a little while, is JPY news. So if I'm going to enter a trade and there's news on the Japanese yen, do you think maybe this news might affect the trade? Yeah. So what I do is before I start trading, I want to see what all the news announcements are like. So if you come here way to the right where it has the date, there's a thing called the filter right there. And you can actually filter the news announcements that you want. I only concern myself with the first two folders. And that's the Swiss franc. I apply my filter. And now here are the news announcements for July 11th that might affect me. There's Great British Pounds, Euro, USD. I don't care what these news announcements are. I just know they're going to happen. So my trading plan for my schedule the way I do things, I'm up early, like 4 or 5 o'clock sometimes, maybe 5, 6, 7, like that. And that's where I'll do some trading. So here, Great British Pound, 6 a.m. Euro, 7:30. USD 8:30. 9. Aussie dollar. So before I go in and enter into any trades with these pairs, I have to understand that it's going to be news. I won't trade them. Or I won't trade the harmonic scanner. I will actually trade the news. There's a whole methodology called trading the news. Cam Moore, phenomenal educator. She's got a Telegram method. My buddy Zolti today, I just got a text from him earlier. He traded the news and won all 6 trades today on trading the news. But that's a different methodology. And if you don't have that in your written trading plan and you're not a trading the news trader, don't do that. If you want to become a trading the news trader, what do? Go find Cam Moore, find her training, find out how to do it, writing into your trading plan. X amount of days a week, I'm going to trade the news, right? And whenever you start anything, you're trading, you're making your trades in your demo account. And when you start your demo account, now this is for you, you're going to start in demo, right? If you're going to enter the market with $500, set your demo account at $500. Don't have a demo account of $3 million when you're going to start trading with 1,000. You want your demo account to reflect your reality on whatever you're getting in on, okay? And you don't leave demo, in my humble opinion, you do not leave demo until you double or triple your demo account. Now, once you have doubled or tripled your demo account, and now you're trading with real money, even if you put $10,000 in there, you start trading in micro lots, 0.01. And you trade in micro lots, 0.01, until you find out what your trading average is. If you're winning 9 out of 10 or whatever. On the harmonic scanner, set a target. I want to be able to win 20 in a row all the time. When you start winning 20 in a row all the time, then leave micro lots and go into an appropriate lot size. Now, here's a really cool app I'm going to give you. It's called the Lot Size Calculator. Lot Size Calculator is on Android and iPhone. And when you go there, you can just click on it, and it asks you to put in your trading pair. You put in your stop loss. Now, stop loss is a very personal thing to people. I never enter a trade that does not have a stop loss. And there's a couple of reasons why. The main reason why you don't want to enter a trade that has no stop loss is, what happens if your internet goes down and it starts going south? How do you get out? You think you're going to call your broker on the phone? You think that's going to happen by the time you blow your account? That ain't happening, right? So me personally, I never risk more than 3% of my account on any particular trade. That's just my number. It's not advice to you. That's what I do. So then you put in your account balance and the currency that you're getting paid in. You hit calculate, and it tells you your lot size. So I use it all the time. It's called the Lot Size Calculator.
Quick question, Tommy.
Yes, sir.
So when deciding when to put your take profit and your stop loss, how do you calculate that? How would you determine what you want to put your stop loss at or what you want to put your take profit at?
Okay. In the beginning, now you're in demo, correct?
Yes.
Okay, good. So again, I don't tell people what to do with their money. Don't do it. I don't call trades. I don't take anybody else's trades. But the advice I'm going to give to you is designed to be used in demo to get your feet wet. And here's my logic. I set my stop loss at 10 pips. And my take profit is 5 pips. Because if you follow the harmonic scanner the way I teach it, by the time you get in, your spread is going to be less than 1 or 1, and you get to keep 4 pips all the time. Okay? And then you're also going to have a track record. You're going to have 9 out of 10, 15 in a row, whatever. Right? And if you screw up and you drop a trade for 10 pips, how many trades do you have to win to get your money back? 2. You only have to win twice to break even, to get back to even. Does that make sense to anybody?
Right.
Okay?
And is that a general rule you follow in all your trades? 10 pips behind and 5 pips forward?
No. At this point in time, I'm trading very differently from the conversation we're having now. So I wouldn't be in integrity if I told you. But I'm suggesting you learn this way. As you're learning, as your skills go, as you bring new skill sets in, we're going to teach you different things to adjust your stop losses and so on. But no one's going to tell you where to put your stop loss, because your stop loss is a very personal thing that's in direct relationship to your pain threshold, how long you're willing to ride the red bus. If you're a swing trader or a position trader, so if you're a position trader and you're in a trade for 2 weeks, you're going to be down 50, 75 pips before it comes back around on a pullback. It's a different style of trading. What I'm teaching here is in, out, surgical strike, take 5 pips, run away. Run like you stole them. Why? Because I'd love to have you experience a win and experience a loss in a control environment where you don't want to go and strangle yourself because you lost. You blew your 3rd account in a row and you don't know why. Right? This is an educational platform. We're here to learn the foreign exchange. And one of the things I love to get across to everyone here is we're not here to learn how to make money. We're here to learn how to get pips out of the foreign exchange. And because you can take pips out of the foreign exchange, because you can do that, you will make money. You're making money by default, not as your main goal. It's a mindset. Get money out of your head. I want to look at this chart. I want to understand where I can grab my 5 pips and run away. You're never going to miss the move because the pairs are always moving. I want you to take a little walk with me for a minute in your imagination. And we're going to go to a buffet. Everyone's been to a buffet, right? They got like miles and miles of food. You pay one price, and there's miles. I like cheeseburgers. I like big cheeseburgers, like double cheeseburgers, ketchup, raw onion, right? So picture there's a table full of cheeseburgers. Now you're hungry. How many cheeseburgers can you eat? I could probably eat 2 big ones, right? I'm gonna eat 2 big cheeseburgers, and then I'm gonna leave that table. There's thousands of cheeseburgers on that table. I'm eating 2 and I'm walking away. Why? Because I'm full. Do I get upset that there's 1,000 cheeseburgers that I didn't eat? No. Am I upset that there's 40 pips that I didn't take? No, because I got my 5. Stop looking at the pips you missed. Stop looking at the move that you didn't get in on and eat off the 5 pips. Take your 5 pips. I'm full. I got my 5. Because believe me, there's strategies in place where you can have a social trading account. You can trade on 5 or 6 different accounts all at the same time in lot sizes of 50, lot sizes of 25, let's say. $250 a pip. That's $12.50 every move on 5 accounts. I can't even do that math in my head, but you're making $1 million a year. Okay? So believe me when I tell you, We can get you to the point where you're going to make tons of money, but you're never going to make tons of money until you learn how to make 5 pips. Cool? Anybody else?
So what do you do after you look at the Forex Factory?
After I look at the Forex Factory, I can go onto the Harmonic scanner and I see what's current. I go on to my 1-4 day chart. And if there's anything that looks interesting to me, meets my 4 requirements, I'll take the trade. If my requirements are not met, I will set an alarm for when the price has got to move to where I think it's going to come play. It might be an hour. It might be 2 hours. And then in an hour or two, I'll come back and look at the trade. Right? I'm teaching you just the harmonic scanner. There are other methods of trading that I'm not talking about right now, but me personally, I have 4 or 5 different methods that I use that if the harmonic scanner isn't happening, well, maybe I'll do gold cup. Maybe I'll do something else. Maybe, there's multiple different things you could do.
You say you set an alarm. How do you set an alarm?
I just set it on my phone.
Oh, okay.
Yeah, I can set an hour alarm on my phone, go back and look at the chart.
Got it. Okay.
Right? And I trade in TradingView. So on TradingView, you can actually set alarms to come and ping you when price reaches here or this reaches there. And I don't want to confuse the issue, but I can also do a buy stop, sell stop, buy limit, sell limit. So I can set my entries. I can see where my entry is going to be, and I can put in my trade before it happens. Because I know, but I don't want to teach you guys any bad habits. So for now, wait for all those indicators to actually happen before you take the trade. When we're trading for a year, we'll have a different conversation. Fair enough?
Fair enough.
Anybody else? I want to be respectful of everyone's time. We're on for over an hour.
I just got one more question.
Okay, Robert.
Yeah, you said that the next thing you do is you look at the 1 hour, 4 hour day.
Yes, sir. That's over here. You go, hold on, let me go back to my Sherry thing. New share. See, now we should have to scan it back up. So I go over back to the broker, click here, 1 hour, see H1, H4, D1. That's the 1 hour, 4 hour day. I'll come in here and I'll just see what's cooking. Right? Now here's a brand new scan, right? Now this scan is calling a what, Robert?
It is calling a buy.
Yeah, and where are my SARs?
They calling a sell.
So what am I going to do?
You gonna wait?
That's it.
Excellent.
I'm going to wait. I'm going to wait till all my soldiers line up on my side of the freaking trade. Now, this is the 1 hour chart. And now I want you to look at, there's a lot of air. What I mean by air is the SARs are up here. If you're looking at this candle right after the D extension, the blue little candle, there's a bunch of space. And the SARs won't flip until the SAR touches the price. So
Can you repeat that, Tommy?
Yeah. So the SAR, can you guys see this on my thing or?
Yes. No, we're
Yeah,
good. We can see.
Okay, see how there's space from here to here? I call that an air gap. An air gap. This SAR will not flip over until it touches the price. Let's look back over time and see. Okay, see the SARs here? They're on the sell side, sell side, sell side. What happened? This thing touched the wick, boom, and it jumped over to the bottom with an air gap. And then my confirmation SARs, look, it came and touched, and then boom. See how it touched here? And then the SAR flipped. So now, on this trade, I am waiting. And I'm on 1 hour candles. So to me, this trade's got another at least 2 hours before that SAR is going to flip. So I can set an alarm on my phone for an hour, see what the next candle looks like, set an alarm on my phone for another hour, see what it looks like, and go from there. Make sense?
Excellent. Yes, yes.
Yeah, so just be patient, Robert, because this is a good trade. But if you get in now, you might get clocked out on a stop loss before you have a chance to win. Because Lord only knows how much longer this is going to be in the sell before it rolls over into a buy.
Mm-hmm.
Right? So it's just like, remember the good old days when before, you know, smartphones and Google Maps? Remember? And you had to read like a paper map? Remember like they're taking the little yellow marker and drawing the lines on the map to get to where you want to go? Well,
Yep.
that's what this is doing, is drawing the lines on the map. So sometimes you gotta make some lefts and right turns, and you think you're going south to go north. Sometimes it's not a straight line from where you are to where you want to go. Follow the freaking indicators. Be patient when they all line up on the call right now when these stars flip over. So I want everyone to do this, okay? Little fun with numbers. This is USD CHF. That's US dollar against the Swiss franc. It's on the 1 hour chart. This thing's going to be here. And we're going to look at this. 2 hours from now, what time is it? It's whatever time it is.
10:42.
Right. So we're on the 10 to 11 hour candle. So at 1 o'clock in the morning, we're going to look at this, or tomorrow, go and back test this, write some notes, and see what actually happened. And see if you follow these rules, what would have happened. Okay? Anybody else?
One more question. Do you ever use a strength indicator?
All the time.
Forex, okay.
Yeah, I do. But I want you to understand something. The strength indicators are posted by who?
Market maker.
Right. Beware. They're going to show you the fake out, and they're going to lure you into the trade, and it's going to reverse. They are going to lure you into the trade early and reverse. I'm going to say it again. They are going to lure you into the trade early, and it's going to reverse. All right, guys. Tanny, it's back to you, my dear.
Okay, Tommy, again, that was amazing. Okay, I hope that everyone on this Zoom got a lot of value. I think the questions were amazing. Tommy did a great job answering these questions in detail. Also understand that he's on the Zoom here with us on Wednesday. He's also at the Art Club on Thursday, sometimes presenting. So again, you have any questions, please reach out to us so we can answer them. But I want to wish everyone a very good night. Thank you for being on this amazing Zoom. Okay, and we'll see you again next week. Sounds good?
Thank you.
Good.
All right. Thank you, Tommy.
Tommy.
Welcome. You're
Appreciate it.
welcome.
Thank you, Tommy.
All right, thank you.
Bye, guys.
Thanks.
Okay, have a good
Thanks,
night,
Danny.
everyone. You got
Yeah.
it. Okay.
Thanks, Tanny.
Thanks, Tanny.
Welcome.
Appreciate you
You're
very much.
welcome. Appreciate you guys.